Hi, everyone. Welcome. Thank you so much for joining us today. We have some fun poll questions up as you enter just to kind of get the conversation going. But as we wait for people to trickle in, then we'll get things started. Good morning. Hello. I guess good afternoon, depending on if you're on the East or West Coast today. We're super, super happy that you're here. All right. Well, all right, since it's one after, I don't want to waste any time between the conversation of Kat and Ken today. So I'm going to go ahead and just get things started. So welcome to Climate First Bank's fourth Fireside Chat. I'm really, really excited about this one in particular because I've had the privilege of working with both Ken or Kat over the past decade. It's their influence and mentorship that I first became passionate about values-led banking and have now rooted myself in this critical work. So I'm really excited to start today's conversation by introducing Climate First Bank's founder, CEO, and chairman, Ken LaRoe. Prior to Climate First Bank, Ken successfully founded and operated two other community banks, Florida Choice Bank and First Green Bank. It was the heartbreak of selling First Green Bank and the desire to leave the world a better place for his grandchildren that inspired him to start Climate First. Climate First Bank was influenced by the book Drawdown, where Ken envisioned a bank that's core mission was to reduce atmospheric CO2. We opened Climate First Bank in June of 2021 as the only benefit corporation bank in the state of Florida, and we have since been operationally net zero since day one. Became a certified B Corporation in July of this year. Ken is a Florida State and more proudly a University of Florida graduate, a lifelong resident of Eustis, Florida, and a proud husband, father, and grandfather. So thank you, Ken, for joining us today. And would you please do us the honor of introducing Kat?
Absolutely. Thanks, Lauren. And this is really special for me too, Lauren, to have you here with us and have you having been um, with us and then Kat and then us again. And that's a really neat thing. And I'm really glad that you have started your career with us. We hired Lauren right out of UCF and our great Central Florida University, and she worked with us for a few years and then transferred to California and then transferred back. And it was almost like going from one division of the bank to another and back again. So thank you. Um, it's with great pleasure that I introduce my good friend Kat Taylor. The the story behind our meeting kind of revolves around the Global Alliance for Banking on Values and just values-based banks in general in Florida and the U.S. And bank, I researched green banks and um, New Resource Bank and Triodos Bank popped up, and I reached out to the CEOs of those banks and started talking with them and asking them what they were doing. Then I found out about Kat's Bank that was in the process of getting going right at the same time, and we met or were introduced, and we started to think about, well, what can we do in the United States or North America for best practices, get together these values-based banks. So we met in person in Chicago, gosh, I don't know, a million years ago, 15 years ago, and kind of kicked off that whole concept of a US-based, values-based bank organization, and now it is the North American chapter of the Global Alliance for Banking on Values. So Kat's really unique, and it's kind of amazing that she ever got in the banking business in the first place, which is one of the things I want to talk about. But she's an absolute awesome human being, founder and board chair of Beneficial State Bank. She's super creative, and we won't get into all the details. She's super talented. She's a fantastic singer, and she's a great athlete. And most people don't even know it, but she was on the track team, I think captain, right, of the track team at Harvard, and then went on to Stanford for MBA and law. And intellectually, I'm not even really sure that I should be allowed in the same room with Kat, and thank goodness that she does what she does, because they have grown a fantastic bank that's now all up the West Coast and doing fantastic things. And one other thing that Kat's heavily involved in is what I call food sanctity, and she has a research ranch in California that they're doing really cool stuff out there too. We'd like to try to kind of stick with the change that banking can create more than that today, though. So, Kat, thank you for joining us.
Oh my gosh, thanks for the opportunity. Sorry, it's just getting the poll down. You embarrass me. Way too kind. But I'm really excited to talk about banking. It's complicated. It can be very boring, but it is so important. And I try to remind myself of the scale and influence of banking. So I go do very informal Google searches. So don't hold me to these numbers, but ballpark, just to give you an idea of how important it is. In 2022, the US gross domestic product, GDP, was $23 trillion. One of the industries we worry the most about, oil and gas, the big energy companies worldwide, their total assets, okay, different number, that's not a revenue number, it's an asset number, but assets are more important because they're doing activities every year in and year out, and earning those companies money. The total assets of the top 10 energy companies were 10 trillion. The total assets of the financial service sector in the United States alone is $123 trillion. If you add the shadow banking system, it pops up another $60 trillion. It's the biggest, most influential industry in the world. It spends the most on political lobbying. It drives every other industry. If we don't get it right, we won't get the other industries right either. So I'm so thrilled that everybody is involved in banking here. And I'm really eager to talk about Beneficial State Bank as a model and part of a movement that Ken's alluding to, the Global Alliance for Banking on Values, the B Corporation banks, new stakeholder capitalism models, and resisting unbridled competition in capitalism to respect the interests and the needs of all stakeholders of banking, which are much broader than just our equity shareholders. They're the customers, colleagues, communities, the environment upon which we all depend, the public interest at large. We are quasi-public institutions, and we have to get our stuff right.
Thank you, Kat. Those are amazing figures and scary figures, and it kind of ties into some of the questions. But first, I wanted to ask, how's your family?
Oh, they're great. They're leading their one wild and precious lives. Tom Steyer is running a big climate investment platform called Galvanize. Sam Steyer has been in clean tech a long time and venturing into AI. Gus is working in the built environment as a newly minted architect and renovation architecture, especially. Evie is in finance, investing in food, fisheries, forests, and ag tech. And Henry is a brand new doctor working in pediatric internal medicine. So I'm just saying all those for professions because this generation is going to change this world for the better faster than we could ever imagine. They are all purpose driven. They are focused on how to create a new civilization that's good for everybody. And I'm just so happy that they chose professions where, by and large, Tom and I cannot even give unsolicited advice.
That's you're so right about that generation, and I can't remember how old your children are, but the Zoomers I think are even gonna maybe one up the millennials. But one really important thing is all the millennials are starting to have children now, and my daughter now has 4 children. The little one is only 3.5 months old. I don't know, almost, yeah, 3 months, 3 weeks. And so that's a constant reminder to me of exactly what motivates me and gets me up in the morning. Just as that generation, our grandchildren's generation, are the ones that are going to really where it's going to really hit the fan.
Yeah,
You
yeah.
know,
Grandchildren, we have 2 grandchildren. They're very motivating. I also am not done. I always say the next generations are going to be bigger, better, faster, stronger than us, but we have to stay in the traces because we have responsibilities, my generation, to bring things around right. So I know you're doing the same thing. You're not retiring anytime soon, and neither am I.
well, that's yeah. I get asked that all the time. Do you get asked that? You know, when are you going to retire? Or when are you going to? And I get asked, when are you going to sell the land? I've started, and it's like I don't know. I tried that for about 2 months, and it was awful. And I tell people I'm not going to retire. I've refired. You know what that looks like. It may be different, but what do you
Yeah.
tell people?
People don't ask me. I don't know if there's a sort of gender thing in that. I don't remember anybody ever asking my mother when she was going to retire, and I don't remember a retirement date for her either. So I don't know what that's about, but a,
Interesting.
a woman's work is never done, or I don't know, but
Yeah.
I love work. I love the work that I get to do, and the company that I get to keep. And I ask myself every morning, is it working? Does it matter? Could someone else do it better? So when someone else can do it better, I'm handing it off. And that's happening on a daily basis with a big team of really perspicacious leadership all around me. It's great.
I'm really
Anyway,
glad you brought that up too, because I'm feeling the same thing. I'm handing off more and more every day. I've got to hand off more and more every day, and I'd like to focus on what really matters most to me and the organization. And from in the organization, the way I'm looking at it now is from a long-term perspective. It's not the build to exit model. It's the build um, to provide the shareholders what shareholders need and expect and what I want them to get, because they're all my friends, but still provide a fantastic financial institution that does a lot of good, gives a lot of people a lot of opportunity, and makes a lot of money. So, but you were a non-banker. Now you're very much a banker. Why did you what's it been? It was you opened in 09 or 08?
2007. We were the last
2007.
charter let before the financial crisis. And although I come from a banking family, my grandfather ran Proctor National Bank out here on the West Coast. I had no intention of being in banking whatsoever. It's just Tom and I were working in philanthropy, in politics, and a lot of areas trying to figure out how to crack the problems of large overlapping systems from a systems change standpoint. So energy and climate, finance, food and agriculture, et cetera. And we realized that we weren't going to learn the insights we needed unless we were actual actors in those systems. We had a hunch there was something terribly wrong in the banking system. In 2004, after we lost that presidential election and we were not going to DC, we decided to get serious about starting a bank to understand what was going awry in the banking system. Little did we know that we were about to run into one of the biggest financial crises our world has seen. But it was endemic of what was wrong in the system. I think of banking as the original and most powerful form of crowdfunding, among other systems throughout our human history. But essentially, we pool our idle cash, we deposit it in banks to finance the world in which we actually wish to live. What's happened is we've been divorced from that agency and accountability. And it's not that a specific deposit funds a specific loan, but all deposits fund a lending practice. And that's what matters the most. That's the most powerful thing that a bank does, especially in a model like banking, which is leverage. At the most conservative level, we can take $1 of equity, pair it with $9 of deposits, and make a $10 loan. That's 10 times leverage. It's more complicated than that, as you know, because of the fractional reserve system. But that's the sort of oversimplified view of it all. The problem is that the banks have occluded us from that lending practice. So we don't know what it is. We wouldn't support it if we did, by and large, and we have no influence over where it should go. At Beneficial State Bank, we absolutely promise our depositors that we will lend in accordance with their values. And we presume to know their values because we ourselves adhere to a set of progressive values. So our loans can only go to mission forward activities like affordable housing, renewable energy, community-based nonprofit organizations, fair auto loans, fair credit cards, et cetera. And they can't go to something bad. We will not finance fossil fuels or private prisons or extractive finance. That's restoring the agency and accountability of our depositors over where their money sleeps at night. I know a lot of you on this call know that, but that's the most fundamental basis of values-based banking to me, is the lending practice. So Beneficial State Bank is now coming up close to $2 billion in assets. It's in the 3 West Coast states. We've downsized our branches, as likely a lot of other banks are, in favor of video banking, mobile banking, et cetera. We have just under 200 employees. We are a triple bottom line organization mandated to deliver racial and social justice, environmental well-being at the same time that we're financially sustainable. We are a B corporation. We adhere to certifications to keep ourselves honest to all of our stakeholder groups. We are a community development financial institution. We are a Global Alliance Banking on Values Bank. And we're constantly scouring the landscape for regimes that hold us accountable to our mission. I think what we're really trying to do is change the model of banking into one that we call beneficial banking. And it really pertains to 6 areas of activity in the banking. The one that I talked about, lending, is the most important, but there are 5 others that matter as well. Governance, how a bank is governed, really, really matters. As I said, we're quasi-public institutions. We should be allegiant to all of our stakeholder groups. We have responsibilities in our regulatory manifestation that extend well beyond pure financial safety and soundness. We're responsible to stop cyber fraud. We're responsible to stop money laundering. We're supposed to ensure fair lending, non-discriminatory lending. So why not extend that to all areas of activity of the bank? Make sure they're all aligned with the values of our depositors and the public interest at large. Governance for us, our economic rights are owned entirely by nonprofit interests. They are not trying to maximize profit. They are trying to deliver on their mission purpose, and that's very aligned with our own. But if you can't be owned by a nonprofit, all those other certifications really help govern in alignment with our stakeholder groups. The lending practice is area number 2. The investment practice, we make sure that the cash that we put in securities is also aligned with purpose. Our products and services have to make you healthier the day after you take them than you were the day before. They have to have mission at their core. For instance, our overdraft policy, we process checks smallest to largest to minimize the number of overdrafts. We cap how many that can be charged every day, and we get people out of overdraft as fast as we possibly can by calling them, consulting with them, et cetera. Then our advocacy is always in the public interest. We will not advocate for our own selfish single interest. And most recently, we were very involved in reorganizing the Department of Business Oversight in California into the Department of Financial Protection and Innovation. You'll notice that sounds a little bit like the CFPB, the Consumer Financial Protection Bureau, that's been eviscerated first by the Trump administration, now by the US Supreme Court. So we're trying to reestablish that agency watchdog in the state of California, which is the largest financial market. So if we get the products right here for consumer safety, we'll get them right across the country. And then the last area is transparency. We have to be transparent about everything we do. We report every year in an impact report, everything we do, everything I just talked about, all the loans we make, where they're going, where they're not going. Our employment practices, we pay 150% of living wage to all employees so that we're paying them to live, not just to work. We measure our carbon, water, and greenhouse gas emission footprint every year, drive it down per capita. All these things are really important to get banking aligned with values and to change the banking system. We can't just be one good bank or 5 good banks or 30 good banks in a bad system. We have to change the banking system for good. And I think that's going to happen in a number of ways, but I'll stop monologuing right there for a second. Just that's sort of the bank model. Now, how do we proliferate it across the financial landscape?
Well, Kat, that was something that I was keenly interested in when we started First Green, which again was right in that same era that you started. And we got the last charter granted in the state of Florida in 2008. The last charter they granted for 9 years of the state of Florida. So it was kind of the same boat you were in through that meltdown. But I had hoped from the start that we could create what I kind of think of as an operator's manual for values-based banks, because I had a lot of my friends in the Florida banking industry. Oh, Kenny, I'm so proud of what you're doing, and I'm so glad somebody's finally taken a step and a position. And it's like, okay, well, you're CEO of a bank. Why aren't you doing that with your bank? And by the way, we're here to help. We'll hand you everything. Policies, procedures, everything. And it kind of goes back to, if we're going to save the planet, we got to change everything we're doing, and we got to change it really fast. And so here I am, however many years later from the start of how many years since 2008? I can't do the math in my head fast enough. A long time. And we've only gone from a handful of values-based banks in America to a little bigger handful. maybe doubled or tripled, but starting at 4 or 5. And so it's not happening fast enough. How on earth can we make it happen faster?
Yeah. So first of all, I think though we're few in number, we are point of the spear banks, and we can suggest a future that is scalable without actually being giant ourselves. In fact, I would argue that we never want as big of banks as we have right now. Again, we need a federated system of community and regional banks that actually finance Main Street America, not these large hedge funds posing as banks.
That's a great idea.
Yes, yeah. So, but theory of change about how we're going to get this done. First of all, God bless the handful of banks that are out there, because oh, you deserve a bank like this. Let me hear you say, you deserve a bank like this. So consumers, we have to enliven them with not just the possibility, but that they deserve banking like this, and they shouldn't take anything less than it. Tell Chase Bank and Jamie Dimon to go away, because they're not delivering on the full value of the full promise of banking. Hard to do because these massive banks are everywhere, but we hook into the consumer movements run by the movement experts, like Dakota Access Pipeline, like the Movement for Black Lives, like you name it, alerting people that one of the most powerful things that they can do is align their banking for good. Second, regulatory regimes. As I mentioned, we're already regulated for a lot of non-financial performance requirements. Let's just amplify those out into the full stakeholder capitalism model, and get these certifications that are now voluntary to be something closer to mandatory. And I think the regulators are starting to listen to this, because the financial first and only banks are the ones getting us in trouble. This mad dash for maximum profit, it's really dangerous. And it's dangerous not just for the individual banks, some of which just failed this past spring, but also for the system at large. So right now there's a flight to subsidy. It's not a flight to safety. Deposits are leaving the regional and community banks and going to the big money center banks, because people know that we can't let them fail. They're too big to fail. That's a problem, because I said those big money center banks don't, by and large, finance what we need in Main Street. So let's design an insurance system that helps us keep the deposits at the regional, local level where they generate and where they belong and where they should come to fruition by creating loans that finance the world that we actually want to live in, by increasing the FDIC insurance for the banks to something more like $5 or $10 million. The modern economy has companies that have payroll. 3 months of payroll can easily get pretty high up there, and we need to be able to assure them that they're safe. And by the way, that doesn't necessarily cost the system more money. If it does, the big banks should pay for it, because right now they have the equivalent of unlimited FDIC insurance. They will not be allowed to fail. They just don't pay for it. Even if they have to pay for it, it's possible that the cost will be less because the risk in the system will go down. We'll have fewer bank failures and more economic benefit in our local economies. And then the third area, so consumer movements, regulatory reform, and then the last one is industry relations. And Ken, to your point, your bank, many of the banks, they have playbooks and they're willing to share them. We've actually put out in the universe for crowd sourcing a set of ethical banking standards. Like, let's figure this out together. Hang all the ornaments on one Christmas tree and try to meet those requirements across all the activities that I mentioned before. Get everything about banking right. We also are working with, I think it's 30 banks now, including a couple of the big ones. Thank you very much. And by the way, no shade on people who work in the big banks. People have to work somewhere. But I'm just saying the big bank model is not one that we can afford, and so we should not support them with our business. But these 30 banks are all working on underwriting for racial justice, because we know there still persists massive racial and other types of discrimination in lending, and it really matters. It doesn't just mean that you can't buy a home. It means you might lose your home because you can't get a home equity line to bring your sewer connection up to code. I mean, they're devastating analyses of persistent or discrimination. And I think a study of 31 million mortgage files between 2016 and 2018 showed persistent discrimination in housing lending. And that's devastating. That's how people are building nest eggs and assets and so on. So industry relations means let's create a new bank model with very robust playbooks and encourage other banks to do this, because it's just a better way to make a buck. It's more resilient. It is more ethical in my view, but it's a better business model. Let's just all get on that same page too.
It is a better business model, absolutely. And I know that I experienced with First Green early on a lot of regulatory doubt, if you will. You know, they really questioned and called us a niche bank. And over time, we've developed the most phenomenal relationship with both our state regulators and the FDIC. And I understand that it takes a while to build trust, that we really do have good motives, and we really are trying to do all the right things and take care of the shareholders and meet all the regulatory requirements. And I think we go above and beyond on the regulatory requirements. But I was thinking of your ethical banking standards, and the thought that comes to mind was, gosh, can we make that a standard, you know, like a B Corp certification standard or something? That would be really, really cool. But back to the regulatory overlay, or LaRoe, if you will. Did they ever question y'all's motives and all that? And then have they bought in now? I mean, do they seek you out and say, well, what's a good way to handle this, or how are y'all handling this? Because we've actually had that happen, which is just fascinating.
Yeah. It's funny. I just happened to be at a benefit for a Good Samaritan last night, hosted by one of our former regulators, a wonderful woman.
Wow.
And I thanked her. She was the original approving regulatory team that granted us the charter. And I thanked her and said, you know, I don't know if you felt this at the time, but we were worried that the fact that we were owned by a nonprofit would be a problem for the regulators, because they tend to rely on profit motive to keep banks financially safe and sound. That's sort of, like, oh, if you're super disciplined about turning a profit, then you're going to, underwrite credit well, and you're going to manage risk well, and you're going to do all these other things. And that's true to a point. But Silicon Valley Bank was very, very profit focused. And I think it ratcheted up their risk in their securities portfolio, and their lack of diversification in their deposit base, over reliance on venture backers, et cetera. So she said that it wasn't a detraction to them at the time, but they didn't yet appreciate that having a broader mandate could actually build in more resiliency. But she thinks it does now. Like, that makes sense to
that's
her
cool.
now.
That's
yeah.
cool.
So, and not saying we're perfect. I mean, we still have to meet. We have to be very serious about safety and soundness. Or if we're out of business, we're not having any mission impact. So, that's likely the first order of business still on our minds. But I do, some of the regulators who I've been privileged to work with, including Rich Cordray, who ran the CFPB, was on our board for 3 years. And I think those types of regulators deeply understand the quasi-public nature of banking, and that it has to meet many stakeholder groups, and that enterprise risk and opportunity management is really important. And now you're seeing signs like at the SEC, or about whether we need to require climate risk reporting, whether it's a material risk in the disclosure section. So I'm hoping that the connection can be made with taking contra mission activities add to the risk in the banking system, and we can't afford that at this point. And I'm sorry that here we are, COP is happening or just finishing, but even since Paris, which was a reasonably good advancement of national commitments on climate, the banks have been lending even more, hundreds of billions of dollars into fossil fuel lending. And at some point, the risk to the bank is de minimis compared to the risk to society, but they're tied together. So hopefully I go hoping that the regulatory system does catch up with how to do beneficial banking and leave behind this very extractive model that's killing us and the planet.
Yeah, hopefully. But that kind of leads way back to what you were talking about before, is you guarantee to your depositors that their deposits will be used for good, which the easiest and most impactful way to do that is to not go into excluded stuff. And I don't want to say industries, because it's not just industries, it's stuff. And you're fortuitous, I guess, it's fortuitous that you are in California, as opposed to us in Florida that launched this really cool bank idea, including being a B Corp certified B Corp, the first and only bank that's a Florida Legal Benefits Corporation. And we launched with an exclusionary list of businesses, industries, stuff that we won't do business with. And they included extractive industries, which in Florida includes sod farms, the mining stuff, porn, guns, for-profit prisons, on and on and on. Well, as you know, the Florida legislature, led by Governor DeSantis, passed House Bill 3, which forbids and makes it a mandatory safety and soundness violation for the bank if we don't do business with certain industries. And they went as far as to delineate those industries, which kind of exactly matched our exclusionary list. So of course we've done away with that. We've done away with all mention of ESG. And it's just insanity to me to think that this stuff has all been politicized and vilified and demonized, for no other reason than power. And I don't know. I mean, it's in our DNA. You know, you can't change your DNA, and we're still going to do good. But if somebody walks in with a fracking request, we've got to look at it.
Yeah, that is a very scary broader trend, not just the sort of anti-woke capitalism, which is insane to me because for 100 years, we've had a laissez-faire attitude towards business and our economy, that business people know what they should do and we shouldn't tell them what to do. And now they're telling us what to do in a way that is tying our hands to evaluate risk and opportunity as experts in our field. That is insane to me. Easy for me to say out here in California because I'm not facing that kind of hostility directly. But of course, it's rolling across the country, and it's coupled with these harrowing lawsuits brought under the Civil Rights Act for sort of reverse discrimination. It's also going after venture funds that are in the business of providing venture capital for Black businesses. Like after 400 and plus years of the legacies of slavery, Jim Crow, and mass incarceration, how are we supposed to repair and restore to a fair economy if we can't repair and restore? So I agree that is very scary, and we're looking at that all the time and trying to figure out this next election is super important. They all are, but this one's super important. But I will say there's also some real bright spots on the horizon because coming through the pandemic, the community banks did a really good job of the PPP lending. I know there were bad headlines about sham PPP, that's Paycheck Protection Program lending. They kept people paid when they couldn't work during the pandemic, which if you think about it, is so smart because that means those consumers in our economy are still able to consume the things that they need in the economy, and it didn't shut the economy down. So we did a lot of that lending. It went to the right. We did $300 million of that lending, I think, and 25% was to women or minority-owned businesses, 33% to nonprofits, 90% of the companies had 20 employees or less. It did exactly what it was built to do, and Treasury rewarded us, and Congress too, by allocating $12 billion to recap the CDFI banking community. And so Treasury just invested $218 million in Beneficial State Bank, which is going to help us scale and grow and have more impact and deliver on the promise for which they allocated that capital. And I should give a shout out to Beneficial State Foundation. That's the organization that owns most of the economic rights of the bank. And they are a critical partner for us. They can do a lot of the activities that we can't pick our head up from operating the bank to do. So they are the leaders on the ethical banking standards, on the underwriting for racial justice, and so on. It's they have a lot of great transportation justice, all sorts of stuff going on if you go to their website. But just saying, we're facing real scary opposition, and honestly, we're under attack at the same time that some very important organizations are supporting us as well. And I mean the whole sector. So also the Biden administration has passed something like $600 billion of money, 40% of which has to land in frontline communities. It's going through the CHIPS Act and the Greenhouse Gas Emission Reduction Fund, as well as IRA, the Inflation Reduction Act, and the Bipartisan Infrastructure Bill. That's all critical investment capital to retool this country to face its climate and justice future. Because we're not going to restore justice without healing the planet. We're not going to heal the planet without restoring justice, in my humble opinion. So that kind of support is going to trickle down to us banks too. We can't be direct recipients, but we're a critical piece of the private capital markets to pair up with that public funding. So it's both good times and bad times, I would say, Ken. And if you need to, come on out here to California with your bank, and we'll just do some national products that reach back into Florida.
Yeah, exactly. And then to that point, I wanted to go back to the point of the spear banks, just for the listeners' edification. There are groups of banks in America that are really doing great things. CDFI, which we refer to as Community Development Financial Institution, and there's a number of them that aren't in the Global Alliance that are doing great things. A lot of work in low to moderate income communities. MDI banks are minority depository institutions, and they can be, ethnic, and they have to be ethnic owned or ethnic controlled kind of thing. And the Global Alliance for Banking on Values, GABV, which we refer to, is a nonprofit that's based in the Netherlands that really kind of coalesce the whole movement. But one thing I did want to add on the affirmative action thing, Kat, that's really disturbing me. As you know, and many of the listeners know, I was a Republican until I was 57 years old, and a good bit of that time a hard right Republican, and I completely vehemently opposed affirmative action. What was I supposed to do? I was a conservative Southerner. Didn't make sense. My dad said it didn't make sense, so I was opposed to it. And now that in the US that it's getting dismantled at every turn, it's incredibly disturbing me because I now realize that it worked. We just didn't get far enough. There wouldn't be African American doctors in Lake County, Florida, if it weren't for affirmative action. And my primary care physician's African American, and my dad goes to him, and my aunt goes to him, and my uncle goes to him, and my family. And it's like the absolute best outcome you could hope for a really conservative Southern family to now trust their health to an African American would not have happened without affirmative action. And so I'm deeply distraught about that. And I guess that's part of the values-based banking. It all flows in together. We're all about the climate, and if we don't have a planet, we don't have anything. But everything in the climate flows down to everything else also. So
yeah. So I saw in the chat someone asking you about carbon drawdown tracking, and I should be more up to date on this. In fact, I'm supposed to be reviewing our impact report, but I know we submit to a lot of carbon tracking kinds of regimes. But maybe I saw Will in the chat. You could drop in some more information about that, because California just passed legislation requiring companies with $1 billion or more in revenue to report all the way through Scope 3 emissions. So that's supply chain emissions, really, really important, and on a pretty near in timeline. I think it's by 2027. And that's the first step to measuring so that we can manage, so that we can mitigate and eliminate. So that's a very positive thing in a large state like California, which can be more of a microcosm for the nation than people suspect. I know we're perceived as a very liberal, very blue state, but we are actually more purple in nature if you get out into the rest of California and away from the emerald cities on the coast. We have the state of Jefferson far up north, we have Orange County, we have the Central Valley, all very, very conservative. Kevin McCarthy's from California, of course. So if we can get something like that passed in California, we just passed permanent funding for universal free breakfast and lunch for all 6 million school children. And that was considered the holy grail of food, reform. And I know you're concerned about food sanctity. It's really important that we feed our school children from a moral, educational, health standpoint, the good food, and especially when they get so much of their daily caloric intake from school food. But it's also important to shift the food supply chain. That was legislation thought to be impossible. It was a budget move here, but now California has done it, and now 25 other states are in process of doing it. 9 of them have also passed it. So we can be kind of a catalyst and a microcosm for the rest of the country. And I think that carbon measurement requirement is going to be really important to us bringing business around, right? Especially coming off of COP, which what I'm hearing is COP turned into sort of an oil and gas conference, given some of the nation hosts and national hosts and some of the large oil companies that were very, very prominent there. So again, it's like The Lord giveth and the Lord taketh away. We're like, we got good stuff going on and we got bad stuff, and we're constantly fighting rear guard actions, but we have to keep moving forward at the point of the spear.
Yes, absolutely. And then another comment on your PPP program to show the power of banking. The community banks really pulled that off. It would not have worked. It would not never, and it was a great program. Sure, there was fraud and all that, and something that was done that quickly, which it had to be quick. But if it weren't for community banks, it wouldn't have happened. I mean, the big banks hardly did anything as a percentage of any of
Yeah.
those PPP loans.
I don't know if you got this, but we definitely got rebound off of that, because companies and nonprofits would go to their bank and the bank would say, we're not going to do that. So they'd come to us.
Yeah, we weren't open yet, unfortunately, but
Oh, that's right.
a lot of our friends got it, got the rebound.
Yeah.
Hey, Lauren, you just popped in, and I know that you're going to say we got to go to Q&A, and Kat, thank you so much for everything. But yeah, I'm ready to go to Q&A if you are, Kat.
I am. You want me to sing the song now or after Q&A?
Oh yeah, now.
Oh,
Okay.
I say song now.
Yeah, me too.
Okay.
Me too.
So it's a cheap vaudevillian trick. It requires a tiny bit of bravery and a giant amount of humility, because I'm no professional singer. I just like singing, and it sort of lodges in people's minds. I take other people's perfectly good songs and rewrite the lyrics, attempting to be modestly humorous and on point. So here we go. I know that banking might seem boring as a passion, but the financial crises put us back in fashion. Don't let rapacious money center banks leave you bitter. Before you walk away from banking, reconsider. We're here to welcome you and mend your spirit broken, and to get your money market account opened. Promise me you'll give beneficial banking a chance. And in the answer to the quandary, mattress or bank, I hope you bank. I hope you bank. May you never patronize those payday lenders, or be hoodwinked by free checking and a blender. We will never take a customer for granted. God forbid check cashing leaves you empty-handed. I hope you never lose your hard-won cents and dollars. May you hide well from persuasive mealtime callers. Give your savings more than a hellbound snowball's chance. And if you get the choice to spend it all or bang, I hope you bang. I hope you bang. Oh, please come bang.
Awesome. So you ought to name that song "Bank" as a verb.
Yeah.
All right, Ken, it's your turn. What have you prepared for us today?
And I'm thinking not only is Kat a singer, but she's a poet. I mean, that's as good as Eminem. Yeah.
Oh gosh, that was an amazing song, Kat. Thank you for sharing it with everyone. I would say, like, what a high note just to leave on, but we've had so many questions in the Q&A, so I want to get to as many of them as I can.
I know, no pun intended.
Gosh, I mean, like I said, there's so many, I barely even know where to start. But one thing that I think was kind of a common thread was really talking about greenwashing, and now the new term, like social washing and banks, and just, how do we identify when a bank is greenwashing more than others, and then how do we help banks like Climate First and Beneficial State kind of stand out against that greenwashing? Like, what would you say to look for when out there in the financial system?
My observation is, while it's getting worse, it's always been there. And so when we started in 2007, the biggest banks would take out full-page New York Times ads about, an affordable housing project that they just completed. And it was true. They do some really good lending and so on. It's just they're deflecting your view from the harm. So we, from the beginning, said, We don't want to hear anything from you until you stop the harm. If you do nothing but stop the harm, we'll be much better off. When Larry Fink wrote the famous BlackRock letter saying all of our portfolio companies must demonstrate like one good thing, or I can't remember how he phrased it or whatever. It was the mouse that roared, but we wrote a letter back saying, keep your stinking one good thing, stop doing all the harm, get everybody to stop the harm. So that's where we try to redirect that conversation is, yay, glad you supported the opera. How wonderful that you sent a bunch of kids to the ball game. Stop the harm. Identify and stop the harm. So that's why these reporting regimes I think are really important. Like if these banks have to report scope 3 emissions, they're financing, and the social washing I think is really important too. Bill McKibben and I wrote an op-ed about Chase Bank finances Russian oil and gas. Russian oil and gas is what funds the Ukrainian war. Like that's some serious harm going on there. I don't know, Ken, how you approach impostering and stuff.
Yeah. There was one question popped up that said, are there any regional banks that we like, or I don't know, you like or I like or something, but in the Southeast, there's really none that are doing the deep value stuff, but there are some, ethical banks. And to me, South State Bank is one in Florida that's operating regionally, that's got good morals. And it kind of goes back to that House Bill 3 in Florida. I would hazard to say most of the bank CEOs in Florida, probably 90%, are Republicans and conservatives, and they were completely outraged by that bill because of it's telling business people what to do. But for the consumer to find out, and people like John Corbett, the CEO of South State, said, you mean to tell me that I have to now bank a vaping company if they come to me? We have an exclusionary list. And I'm thinking, South State Bank has an exclusionary list, of stuff they don't, they've never, no pretense to anything values driven, except the CEO is a values driven person, you know. So a consumer would never know that. And I just tell consumers the easiest way is to look for verifiable credentials, like a benefits corporation legal status, a B Corp certified, because as you know, getting certified as a B Corp is not easy, and it touches everything. Global Alliance for Banking on Values membership, which is a really strict protocol. There are things that they can look for today, and institutions like Bank of America, Citi, Chase, they would never get any of that. they'd never go through it, one, but they would never qualify either. Look for LEED certification in the bank's buildings. Look to see if they've bothered to put solar on their roof, which are just, they're cost saving measures if you just want to look at it from a bit purely business perspective. But there are things you can look for, in your bank.
Mm-hmm.
I think there's also another question too that could tie into this well, is talking about like credit unions. I don't think we've really touched on credit unions and how they influence the banking system in different ways as well. So any thoughts on that?
Boy, if I can kick off with that, I have strong thoughts on credit unions. The bankers generally hate credit unions, and the Florida Bankers Association especially has been beating the drum for 30 years of they need to lose their tax exempt status. And there are a lot of credit unions doing great things, like Self-Help Credit Union comes to mind. There are a lot that aren't doing great things, that are just non-taxed banks competing against banks that are doing good things, and that's not right. And so my theory is they should be able to be tax exempt if their core mission is to do good. And then if they're not going to do that, then they lose their tax exempt status, and they should pay taxes, because they can offer lower loan rates than we can. They can pay higher on deposits than we can, because they're saving 30%, 20%, 30, whatever the number is now, post-Trump, on their income every year. Kat, if I can volley to you.
Yeah. So I agree that a credit union, like a bank, it all depends on whether it's mission driven or not. What I do like about the credit union model is the ownership by its members. Because I think we're going to need to get to a place where everybody owns a little bit of everything and nobody owns so much of anything. So I'm very in favor of universal basic assets. Like we should all of these big platforms that we depend upon, but where we create value. And it's not just our data that goes on the platform and creates value. It's what we do on the platforms, sharing, shopping, querying, buying, so I kind of like the idea that one day financial institutions could be mutually owned because I think that proliferates the governance and democratizes the management of it. In theory, it's harder to do than to say that. But the other thing I was thinking is that, similar to what you're saying, Ken, is like, how can we incentivize mission-driven behavior in the very business structures that we have? So I love the idea that, okay, you're single tax a preference if you're mission driven, but if you're not, you face the same double tax regime that banks do. Meaning the investor is taxed and the corporation is taxed. I had thought, this sounds improbable, but I had thought about a system where if you aren't mission driven and you can't produce impact metrics along the lines of B corporations don't get negative points. That's a little bit of a frailty there to me. Like, so it would be hard to catch the harm. But if we had a system where you could stop the harm, measure the benefit, and if you meet certain thresholds, then you get FDIC insurance. If you don't, you don't. You can't participate in the insurance pool. Like, why are we insuring institutions that are harming us? And actually, if the big money center banks didn't have FDIC insurance, that would raise their cost of capital, which would make them have to compete against actual hedge funds. Hedge funds don't have low cost deposit capital to wager with. And so maybe that's where they could all go to compete with one another and leave the banking to the mission-driven institutions. But that may be very naive because these capital flows are massive. And the big banks, they do a lot of things at once. So I don't know, like if you had very little corporate paper that was backed by FDIC insurance, what would that do to capital flows to business? I don't have enough experience to sort that one out. But
yeah, that's a really good observation. And one comment for the listeners too, and a distinction between Canada and the U.S. Canada, credit unions are taxed. And in Canada, they have a very small banking industry that's controlled by a number of, just a small handful of large banks. But the credit unions kind of operate like community banks in the U.S. And there's some Canadian credit unions that are doing amazing work. And back to that member ownership, to think of like a Van City, I don't even know how big they are now, billions and billions and billions of dollars, ownership controlled, and it's really cool. Lauren, you have any more questions? We're in the last few minutes.
There's so many more questions, so we'll have a lot of follow-up to do, but since there's only a couple minutes left, I know one way we really like to end our fireside chats is to kind of encourage the audience with some action items, but I think there's just the obvious one of shift your banking. So I guess if I were to omit that being the standard response, like what would you encourage folks to do as an action item leaving this chat today?
Take a kid fishing. That's an inside joke.
I think we have to make banking sexy again. Like, I don't know if you saw The Big Short. I thought that was a brilliant explainer movie. We need riveting explainers because we don't teach banking in school. I go to a 5th grade class every year. It's mostly for me to, sort of test drive, like, how am I explaining that? What do they say? If you can explain to your grandmother and a kindergartner, you've probably got it right finally. and no disregard to grandmothers, I am one, but anyway, I think we have to show people that that banking really, really matters, and it's one of the most powerful things they can take their agency and accountability over back. Like, to me, it's almost as powerful as voting. That it needs to be sexy, because we ain't getting people's attention if you just say banking.
Yeah. Or bank as a verb.
Mm-hmm. A 4-letter word.
Yeah. That's it. A mega ditto on that answer.
A great response, especially I think there was some other narratives within our chat and Q&A functions of just like how in a system where, you know, we're kind of playing in a capitalistic system, like how do you like fight when you're still playing by their rules, and I think kind of taking that narrative into our own hands is like such a critical thing for us to do. So, well, that is the top of the hour. So I am so thankful to have been part of this conversation with the two of you today. Any last minute things to shout out before we say goodbye today?
Well, just to reiterate the point you just made, the tools of the master will not tear down his house. I think it is hard to stand in a system and deeply, radically change it from within, but we won't understand how to change it unless we're within. And I hope you save the chat and can pass it along, because I can't do two things at once, but I'd love to hear everybody's comments and feedback. And I want to be a good explainer, and that requires feedback.
We will absolutely share the chat.
That's my parting comment right there. That's why I do it.
Yeah. Well, great. Well, thank you everyone for joining us today. We will have this recorded and posted on Climate First Bank's YouTube channel, along with all of our other previous fireside chats. I know that there was so much to soak in here, so I plan on rewatching this one myself. If there's anything else, that's it for today. Thank you so much, Ken and Kat.
Thank you.
Thank you, Kat.
Thanks, Ken.
Thank
Thanks,
you.
Lauren. Thanks, everybody.
Bye, everyone.